Do you believe that, with your current income, saving money is practically impossible? Even though it's much simpler to save money when you're earning a lot of money, it is still feasible to do it on a low salary. In this video, I'll share with you 5 simple techniques to boost the amount of money you save each month dramatically, regardless of your income. Your housing costs will be your biggest monthly expense whether you rent or own. While this expense consumes a significant portion of your monthly income, it also presents the biggest opportunity for cost savings, enabling you to save money even if you have a very low income. Many financial experts recommend that the sum of your rent and mortgage payments plus bills should be no more than 35% of your monthly after-tax income. I'll now discuss how this can be accomplished from the perspectives of both renters and homeowners. Hence, regardless of how you now live, you can start using these suggestions to significantly increase your overall savings. Efforts for renters: there are many strategies to lower your housing costs, the first of which is to choose a less expensive location. I still live, so maybe you could get by in someone's spare room or in a studio apartment rather than your current 2-bedroom arrangement. I understand that making this shift may seem pretty drastic, but saving money might also feel rather dramatic. For instance, the monthly rent for a studio apartment in the United States is around $950, whereas the monthly rent for an average 2-bedroom apartment is roughly $1,100. This difference represents a savings of $150 without accounting for any further savings. Renting a smaller space would save you money on utilities, but if you don't want to move, it could be time to look into ways to lower your existing rent. Negotiating rent reductions in exchange for your services, such as remodeling, or agreeing to sign a lengthy release of your tenant security that your landlord requests, are both examples of effective techniques. In order to reduce some of my expenses when I was renting, I traded tax guidance for monthly accounting services. During the life of my lease, the straightforward exchange of products and services allowed me to save thousands of dollars, which I was able to achieve while having a very modest income. Efforts for homeowners: if you own a home, this advice is quite different. To save money, you generally don't want to move out. Over time, even seemingly insignificant actions like turning off the lights and using less water can result in big savings. Renting out a room is, nevertheless, the most effective way to cover your living expenses. You may easily earn a few $100s more per month by renting out a room in your house, which will help you pay your expenses and provide you additional money at the end of the month to put in your piggy bank. The third way you can reduce your monthly expenses is by paying off your mortgage early if you don't have an extra room to rent out to offset your housing expenditures. Here are a few strategies to lower your mortgage costs and start making significant financial savings. To begin with, go from monthly to bi-weekly mortgage payments. Consider that there are 52 weeks in a year and 12 mortgage payments. If you pay your normal monthly mortgage payment on the first of each month, by splitting your monthly payment in half twice a week, you can make 26 installments or 13 full payments in a year. When I understood how much interest you can save by switching to bi-weekly payments, I immediately began doing this. Therefore, to further illustrate, let me give you an example. Consider that you had a $300,000 mortgage with a 3% interest rate for 30 years. During the course of these 30 years, if you make monthly payments, you'll end up paying almost $150,000 in interest. Nevertheless, if you switch to bi-weekly payments, your total interest expense would only be $130,000. You would save a great $20,000 while still benefiting from all the same advantages because you would be paying down your house more slowly. Please let me know by pressing the like button below if you'd want to have an extra $20,000 in your pocket right now. Refinancing at a time when mortgage interest rates are falling is another strategy you can use to lower your monthly mortgage payments. You could believe that refinancing your mortgage is in your best interest because it shortens the loan's duration and lowers your interest rate. By way of another illustration, if you had a mortgage of $250,000 and managed to lower it from 3% to just 2.5%, you would save almost $25,000 in interest over the course of the loan. Remember that refinancing has costs and fees, so you'll need to do the math to determine whether the interest savings will make it worthwhile. But, as you can see, refinancing and savings can be significant. So it's definitely worth looking into if you're trying to save on your housing costs while earning an extremely low income. You must avoid debt at all costs if you wish to save money while earning less than you'd like. This is due to the two ways that debt prevents you from saving. First of all, debt requires regular payments. If that debt was avoided, you would have more money in your pocket each month rather than receiving a visit from creditors every month. Second, debt nearly invariably entails monthly interest payments on credit lines. These rates are normally between 3 and 5%, which translates to a monthly payment of between $25 and $40 for a balance of $10,000. Although it may seem like a modest sum, when compounded regularly, it can start to add up. You may begin to understand how having debt can make saving on a low salary a difficulty. When it comes to credit card debt, the problem is only made worse. The average credit card rate, which is 20.47%, indicates that getting into debt is a costly endeavor. To put this into perspective, if you have an average credit card amount of $6,348 for American adults, that means you owe credit card firms around $1,300 in fees per year. Therefore, if you want to save money on an extremely low income, you need to avoid debt and its associated interest charges at all costs. We all want to have fun, but for many people, it comes at a significant expense. Going out to eat, drinking after work, seeing a movie, and making other entertainment-related purchases may put a serious dent in your finances. Thankfully, though, it's not necessary. Going up to the club with my friends was my main source of entertainment when I was younger, but the majority of evenings were regrettably incredibly expensive between buying drinks at the bar and paying cover, most nights easily costing $100. As they grew older, my focus switched to increasing my fortune, but I didn't want to miss out on socializing with my friends, so I came up with new ideas for obtaining quality time with my friends, while not breaking the bank. Going on summertime walks and watching movies at home or at friends' parties have become one of my favorite ways to spend time with friends in recent years. These kinds of wintertime activities are not only more enjoyable to me now than drinking and partying, possibly only because I'm getting older, but also it makes me feel good to know that I'm contributing to my financial future at the same time. In other words, while having fun is something we all need, it doesn't have to cost a fortune. There is no denying that spending money makes us feel good, possibly as good as you know since you clicked the subscribe button below, but if you want to save money and have a low income, you must be able to distinguish between your wants and your needs. For instance, even though you probably don't need to, you might want to upgrade your phone to the newest model. Although you undoubtedly already have a lot of good shirts in your wardrobe, you might want to purchase a new shirt to wear on Friday. When your income is low, you must be especially careful and limit your spending to your essential costs. What should be the dividing line between wants and needs, then? I like to categorize as a need anything that is necessary for my survival, such as basic necessities like food, clothing, housing, and transportation. Yes, purchasing a Ferrari qualifies as transportation, but the bus also gets you from point A to point B in its most basic form. Also, if you were to update your phone to the newest model solely for the additional 2-megapixel camera. Although I am aware that these descriptions of requirements and wants are ambiguous, allow me to share a tried and true model with you. To make better spending decisions, use the gross share matrix from Boston Consulting Group. In order to clearly view where your priorities lie, draw a score containing 4 quadrants, then give them the following titles: high priority needs, high priority wants, low priority needs, and low priority wants. Once complete, start adding items you aim to buy into these boxes. This will provide you the opportunity to evaluate where you think these purchases should fall, enabling you to seriously consider how urgent or crucial some of these items are. You can, of course, limit your expenditure to the absolute minimum forever. So, if you want to make sure you save money on a low income, you must be able to delineate your wants from your need. Automating your savings is the last step to ensure that you can save money even on a modest salary. One of the best things I've ever done for my finances was to have my employer set up automatic deductions from my pay. In effect, these deductions enable me to transfer a portion of my paycheck into a savings account as opposed to depositing the entire sum directly into my checking account. Financial psychologists claim that those who visualize their goals for just 1 hour every day instead of having money automatically withdrawn from various accounts see an average increase in savings of 73% after just 1 month. The more you consider it, the more logical this makes. In essence, you are spending much more carefully, which is why I stressed how crucial it is to distinguish between wants and requirements when trying to save money on a very low income. I now believe there are 2 additional reasons why the savings method has been so effective. First, I'll be able to choose exactly how much I want to save, which will make reaching my financial objectives a lot simpler. Second, it freed up the concept of having to save, allowing me to concentrate on other vital things like improving my abilities to increase my income. Making more money is the #1 way to save more money, as I frequently advise. By freeing up my mental and physical space, I was able to take on more freelance work, bringing in additional cash to increase my savings. Thank you for watching and have a fantastic week. If you believe this video has added value to your understanding of life, please like and subscribe to the channel for more life-changing content.